All right, what's going on? Welcome to Risk V Reward, and today we're going to be talking about why you should not try to trade a stock in front of its earnings. So whether you think you're bullish or bearish on this stock, it's basically unimportant because guess what, guys? It's just too risky to take the trade, okay? Now, I know some guys, they try to get in front of earnings and predict calls and puts and these different formulas, and they'll take their risk, but we try to practice here longevity on how to keep your account full and how to keep those profits actually in your pocket. Okay, so I do have a perfect example from today's earnings on a Microsoft, and I want to show you guys this chart, and let's find out if maybe I may be correct or not. So let's go ahead and jump into the chart. All right, so I'm in my charting right now, and we're looking at the Microsoft 5-minute candle chart. And as you can see here, we were very bearish today. This thing sold off. The whole market basically sold off. And pretty much that's been the situation in this bear market. So we're going to go ahead and just play this and jump right into it. So we're probably about 15 minutes out from actually closing. Okay. Then market is going to close here. Boom. So I went ahead and paused that. But as you can see, the market, soon as the market closed, you got this whipsaw wick off top here, and then you got this whipsaw wick off bottom here, and you're trading in between this humongous $10 range here, okay? $10 to $12 range. And this is not ideal for trying to predict whether it's going to be bullish or bearish catalyst when it comes to earnings. Okay, it is very important to note that depending on your size, this could make or break your account. Okay, and I want you to be very wary of that. So this is a good explanation on why. So let's go ahead and finish watching how this chart is going to perform though. Okay, a little sideways action. Okay. Okay. Sideways action going on. Okay. Looking like a short so far. Oh, there it is. Tuh. Okay. And this is what I mean, guys. This is literally the ultimate trap, right? So, people, there's traders out there probably trying to take the breakout long. There's traders out there trying to get short off those wick tops, and then everybody's just getting pummeled, right? In the middle, everybody's just getting pummeled because this thing is just moving all type of ways. Nobody really knows where it's going. It's going basically, here's the close. It basically ran flat, right? So now you get this huge run up, huge candle, and this is a real candle. I'm gonna keep playing this. This is a real candle, right? That was real buying, right? And so now what you're seeing is you traded from 243 all the way up to 270 virtually, right? So ask yourself this. If you were short and you said, oh, they missed a little bit, the guide was a little bit bad. I don't know what the earnings was, right? Um, I'll read it tomorrow. But if you come out and you say the guy was bad, oh, this is bearish news, and then you're short, even at 100 shares short, you're down like 20 something dollars out the money per share. This is the type of stuff that will break most traders. And I always like to bring this to attention because you see on social media and different aspects of stuff, and they say, oh yeah, you should just buy calls or buy puts on on Microsoft because this, that, and the third are on a certain stock. And getting in front of it, in front of earnings, is really dangerous and it's really risky. So unless you had the account size and the share size that you would take to just take this type of loss, I couldn't imagine a trader trying to hold $20 or, you know, from, let's say you get short down here trying to hold from that whole $20 a share against you. I can't imagine any trader that wants to do that. You're just basically getting ran over, okay? And your account is gone at this point, right? So that's something that you should keep in mind as a trader. It's all about risk to reward, and I will say it time and time again. Now I can kind of show you how you would combat this instead of getting FOMO and trying to get into this trade. So let's go and let me show you. Let's jump into the 15-minute chart, right? So we jump into the 15-minute chart, and as we can see, we have some levels here on this softy, right, on Microsoft. So you could easily come back tomorrow and say, hey, okay, we got some wick top actions here. I don't know where this is going to be, or where this is going to gap down to. This is why we look at the charts in the morning, right? So you could say, hey, I want to take a long off this level here at the 261s, right? Or you could say, hey, I want to get some shorts right here between 268 and 270, and you can risk what you're going to risk here and try to get the reversal all the way back into. So it might even play in a range. You never know. It might play from the 261 to the 266 level. We don't know, right? But this is what it's for, so you can actually build a setup around this tomorrow. Don't worry about the $10, $20 move, because essentially you're not going to get it anyway because you're just trading against algorithms. So regardless of whether you can catch a YOLO play, the small hits matter. The better setups going to last long, and you're going to be able to have a long trading career, and you're not going to have to put money in every month or every other month when you decide to blow your account because you're trying to take a YOLO trade and buy that Lamborghini. So that's not really what it's about. It's about how can you get the best A+ setup with the best risk to reward ratio at that particular time. So for me, trading in front of earnings, I'm gonna give you a no-go on that one. It's a thumbs down for me, but we will see how this trades in the morning, and maybe, hey, I might trade this tomorrow. My eyes definitely going to be glued on this thing tomorrow to see how it's going to perform, and I may not even take a trade on it, because usually when I know a trade is going to be super overcrowded or something like that, I usually try to stay away from it. So from that particular point here, just let me know what you guys think down in the comment section below. Hit the thumbs up, hit the likes button, hit the subscribe button. If you learned something in this case, let me know. And I will see you guys in the next one. Peace out.